Welcome to the Hong Kong Green Finance Association's Biodiversity Training Series Module 4, co-organized by the HKGFA Banking Net Zero Commitments and HKGFA's TNFD Biodiversity Workstream. My name is Jenny Lee, the Deputy Secretary General of HKGFA. In the first three modules, the concepts of nature and biodiversities were introduced alongside the latest global and regional market trends in nature-related disclosures, frameworks, and standards, and practical considerations were shared for assessing the materiality, risks, and opportunities with real-world examples and experience from early TNFD adopters. In addition to the training series, HKGFA was honored to jointly support TNFD's Hong Kong launch event in April, organized by TNFD and Swire Properties, where Ms. Selina Yan, Permanent Secretary of the FSTB HKSAR, gave opening remarks, reaffirming Hong Kong's commitment to nature and biodiversity. Additionally, I'm pleased to share that the work is underway between the public and private sector to update Hong Kong's biodiversity strategy and action plan for 2025 to 2035, with the aim to step up biodiversity conservation and support sustainable development. For today's session, we have a lineup of distinguished speakers for the webinar. Ms. Crystal Geng, Asia ESG Lead from BNP Asset Management, and also HKGFA's Biodiversity Workstream Co-Lead. Mr. Robert-Alexandre Poujade, Biodiversity Lead, BNP Asset Management. Mr. Gratien Davasse, Green and Sustainable Expert Associate from Natixis. Mr. Sylvain Vanston, Executive Director, Climate and Biodiversity Investment Research from MSCI, and Mr. David Dai, Asia Head of ESG Research from Barclays, to discuss the integration of biodiversity in financial products and asset financing and product design for biodiversity-linked and labeled fund products. So just a few words on housekeeping before we start. Please do write your questions in the Q&A box, and the speakers will aim to answer them at the end of the discussion. The webinar is also eligible for CPT hours, subject to your employer's approval. And to claim your CPT certificate, please do complete the survey at the end of this webinar. So I will now pass the floor to Robert, who will present on a biodiversity framework from a financial institution's perspective. Thank you.
Hello, everyone. Very happy to be here. Can you see my screen? Perfect. So yes, this is today a training series. So I'm really glad that I can set the scene for the great panelists that will come after. So I'm biodiversity lead for my firm, which is the investment arm of BNP Paribas Group. And maybe the main message here to start with is that as the biodiversity lead, my role is to implement our biodiversity strategy that we launched 3 years ago in May 2021. But, you know, before doing that, and that's the main message I think here, is that you need to know each other as an FI. So basically, if we look back in 7 years' time, there was no standards, there was no TNFD, there was no data harmonization, and everything has to be, built from somewhere. So I think that's the main message I would say when you are an FI today, and you are starting your journey, or maybe you're more mature in your journey and you want to launch your own strategy on nature. You have a ton of guidance out there that was not there before. You have a ton of data out there which was, again, not there before. So when I look back and I see the journey that we had, I think there are many shortcuts today, and I think it's a very important moment for FIs because we have many let's say useful elements in order to build relevant strategies. So going back in time, for example, we collaborated a lot. I will speak again more about more specific examples. We collaborated with standard setters, with data providers, and that was a preparation of the launch of the strategy. So and today we continue that work with the others, but the work is easier because of this guidance being out there from TNFD, of course, and others. So once we pass this phase of you raise awareness within your firm, you get to know each other better, what you can do, and you want to launch your own strategy on nature. I think a lot of FIs are here at that moment about what they can do today. I think the other big message I wanted to give is that I think it's good not to reinvent the wheel even in your own firm. So for example, what we did is just to reuse our global sustainability strategy that was launched a bit before in 2019, which had 6 pillars. So basically, as biodiversity lead, my role has been to put biodiversity in each of those 6 pillars and each of those bricks. So if I quickly mention some of them, so when we say ESG integration, is basically how you use available ESG data to inform your decision making and to provide relevant information to your portfolio managers. Well, here, how to embed Iceberg Data Lab or Spot data into the decision making and to the ESG score, for example. When we think about stewardship, how to improve your dialogue with companies on biodiversity issue, it can be talking very specific cases, such as how to protect the horseshoe crab, which the majority of the pharmaceutical companies use. They use their blood to derive their vaccines, for example. And it can be more high level. How do you incorporate nature into your own strategy? If we think about the policies, that's our third pillar. How to improve the policies that we have. For example, we know there are some sectors such as agriculture, palm oil, pulp and paper, which are basically, there are some areas in which they could be impactful in terms of biodiversity. So how to, put some red lines if you have to, and how to also check the companies that are meeting your expectations. Another angle that we always do is to link biodiversity, climate, and social. So that's, I think, very important to always keep in mind that and to invest having this lens of, am I taking the right decision for biodiversity, and maybe am I not creating a side effect on social inequality or not meeting climate change, for example, efforts. The other stuff, of course, which is super important as we are FIs, is how to provide relevant products. It can be funds, it can be SLLs, it can be whatever, and it will be discussed in the panel, which are good for biodiversity. The issue, of course, is what is good for biodiversity in absence of big taxonomies, or what is nature-based solution, what is good for biodiversity. But anyways, maybe common sense there is useful, and we don't have to over-engineer too much. And the last point is how to walk the talk. How can we, as FIs, involve our employees so that they speak this language of biodiversity, which is a bit newer, right? How to improve the direct operational footprint of our firms via how we eat, via plastic phase outs. Can sound silly, but I think it's also important to onboard everyone in this journey in reducing the impacts that we have on biodiversity. And also another message is, once you have your strategy and you have, implementing some actions, I think it's really important to link that with science and continue to link that with science. So the equivalent for biodiversity of the IPCC is called the IBES, and they have come up with 5 pressures on biodiversity loss: land use change, overexploitation of species, pollution, climate change, invasive species. And that's super important to always keep that in mind, I think, when doing more deep dives and continuing the work that we can do as FIs on those topics. So, for example, what we do is continuing on forest topics, on water topics, because there's tons of work to do, and we have some data on it. How to go a bit away from just the ecosystem view. So today, the data that is available is mainly trying to understand how much FIs or companies affect ecosystems, but it would be good at some point to move a bit more into the species. I was talking about horseshoe crabs, for example. There is a dependency of the pharma industry on horseshoe crabs. So that is the type of thinking that is interesting to continue to have. And of course, hazardous chemicals, plastic today, and last week, sorry, there were discussions about adopting this global treaty on plastic. So yeah, chemicals, plastics are next. There's not just water, forest topic. There are other topics that should be addressed and which are a bit less covered today. I'm thinking about the ocean as well. So yeah, I think it's important as FIs to continue to push for more and to be very ambitious about tackling biodiversity loss from a 360 approach. I wanted to do a bit of deep dive on stewardship because I think that's a very easy way to start. Basically, I was saying you can, if you are an investor and you have one share that you can, one share of a company, so you have one vote and you can use your vote in the good or in the right way, I would say, by supporting more disclosure, for example, on biodiversity, supporting, how TNFD is framing that. So that's maybe a very simple way to use your stewardship. There are other ways. You can support CDP because CDP sends questionnaire to companies on water, forest, now even plastic. So that can be another way that you can use your leverage to really support more disclosure from corporates. So better your own dependencies and impacts. And maybe you can also collaborate with other investors. This is something, of course, we've tried to set up with Nature Action 100, which is a big collaborative investor initiative. But there are also policymakers that you can maybe dialogue with in your own region. So that can be another way to say that the transformation of the economy to a nature positive economy needs to happen also with, of course, policymakers. And that's great that we talk here in this venue. And collaboration is key, of course. So I'm not going to detail too much, but you need to collaborate with all the stakeholders that you can have access to. It can be on data, it can be on standards, it can be on whatever you want, but as long as it's good for biodiversity, it's good to collaborate. And I will just finish by maybe 3 notions. The first notion is dependency. So we hear a lot about dependency. I talked to you about the horseshoe crab blood, which the pharma depends on. But that's, if you take a helicopter view, when you invest in sectors, the companies that are in the industrial sector, for example, in order to generate €1 of revenue, they need to depend on water, for example. That's ecosystem services which are vital for the economy. Without them, we have no economy. So we need to maintain the good health of our ecosystem services. Impacts. So impact, we are using a data provider called Iceberg Data Lab to provide that chart. We did that 2 years ago, and we report on a yearly basis because there is regulation in France that requires us, and that's great, to disclose on biodiversity. So it's good to know where your impacts are coming from on biodiversity. Mainly scope 3, that's a bit a no-brainer, but it's good to see that with the numbers. Mainly consumer staples, consumer discretionary sectors, because of their link with the agricultural upstream part, and mainly linked to land use change. Again, no-brainer because we have been converting a lot of land, and if you destroy the habitats of species, you increase biodiversity loss. So I will end up here just by saying that it's really great to start knowing your own dependencies, your own impacts. In order to do that, of course, there is a ton of guidance. As I was mentioning at the beginning, we have been doing a TNFD leap test on one strategy in this freeing 2 birds with 1 key study. We have been also investigating how we can use deforestation data or forest data, just publicly available information with our own methodology to try to express how much we are exposed to deforestation risk via our own portfolios. So again, we have another public study on that. So, it's just to let you know that we need to do those deep dives as FIs, and we cannot wait for others to do the work for us. So that's a big, motto we have here in BNP Paribas is we need to do the work and do the deep dive. So I really incentivize all the audience to do that as well. And I will leave the floor here just with this final inspirational talk about, let's do the work together. And I will leave the floor to Crystal for the panel. Or maybe not. Maybe I think there's a Q&A. Apologies. Yeah.
There's a question for you in the Q&A box. Can you see it?
Yeah. Yes.
Yeah,
so yeah, I mentioned that we're not supposed to reinvent the wheel and just use the existing pillar. Why is that? Well, I was basically saying that when you are building your own nature strategy, so let's go back to 2021. I thought it was useful to reuse the existing policies that you have in your own financial institution, because ESG, I guess, is not new. So if you start creating a parallel policy or decision making just on biodiversity, it's going to be harder to incentivize employees, the bankers, the portfolio managers, to do the work. So I think it's good to start with what you have and improve. That was the approach we've been taking, so that the employees don't feel overwhelmed with requests from every single topic, because there's climate, there's social, there's forest, there's water. It becomes a bit overwhelming. So I think once you have your policy, it's just you build from there. And I mean, that has been the approach we've been taking. Another question is, would you please share the name of the tool used to assess the impact? So yes, it's basically we're using the data from Iceberg Data Lab, which is a French data provider, which is out there and has been working with some investors. We launched the RFP in 2020 because we had no data on biodiversity at the time. So with other investors, AXA, IM, Eurova, and Sycomore, we launched this call for provider. Iceberg won at the time. It was 4 years ago. Now there's multitude of data providers out there which are here to help investors on their journey to understand their impact. Sylvain is there from MSCI today. There are others out there. So yeah, there is a flourishing offer now for investors, and I think that's great.
Good. Yes, I think later Sylvain will share more information about the existing tools and also the data to the audience. And I have a very quick question for Robert, which is I think that will be our last question after your presentation. We all know, like, under biodiversity, there are so many elements like climate change, water, forest, whatever. So can you give us some kind of more information regarding how the thematic funds or thematic product could be? Because it's just like too conceptual for us if we are talking about biodiversity related thematic funds or thematic products. Just to give us like a little bit more information.
Yeah, I mean, so I think it will depend about the financial institution exposure to asset classes. So, for example, as BNP Paribas Management, we can invest in public equities, we can invest in debt, in private assets, ETFs. So when I say we invest, we can launch funds in those different asset classes. So once you know the type of asset class you want to build, you will have like a strategy which can be different. So for example, if you want to launch a thematic fund investing in public equities, the strategy may be a bit different than if you launch a forestry fund that invests purely into forestry projects. So it's just, of course, there needs to be an understanding of all these dynamics, because the data strategy will not be the same, the reporting strategy will not be the same. So the claims that you can make, or let's say the expectation for your clients, are not going to be the same. So I think each FI need to navigate around that before launching a fund. But yeah, for example, in BNP Paribas, we have launched an equity strategy. called Ecosystem Restoration. We have launched a biodiversity ETF. We are about to launch a forestry fund, private assets. So yeah, I mean, so I think this is a bit. It was a big question about thematic funds, but I think as long as you are very transparent about what you do, how you do it, and what you can offer to your clients, I think that is really key, because otherwise, indeed, the client can be a bit lost in translation. So I think that's very important to be transparent in the building the fund and how you communicate what it does and what it doesn't do.
Okay, thanks for the answer. I think just like it's a very good summary for us to start our panel session, which is exactly on the financial products and also the asset valuation or whatever for financial institutions. So today we have our very distinguished guest, who Jenny has already done the introduction. So we do want to use this session to make all the FI institutions to know better how the integration of biodiversity can be into the financial activities. Because last few sessions we do have discussed a lot on the framework, the data, and what is the challenges. So this session we will zoom it very into product design and also product strategy. And maybe I think we can end the screen sharing right now, Robert, if you want. All right. Maybe I'm going to start my first question actually to Deb, because I do have read a lot of the papers and also the research articles from Barclays in terms of this topic. And I do have just a recent investment team webinar, within BNP Paribas from IPR. IPR side, the credible and also the material policy for line, only for line, actually increased by 100% and 147% just since Q3 2023. So which is doubled the digit of the policy around energy policy, around energy sector. So we do have seen a very positive increase in terms of the policy and also the regulation globally. And if we do deep dive into the Asian area, we do have seen Indonesia, India, and also China, they are relatively more positive than the rest of the world. So the first question for Dive is I do want to, maybe you can share more information about the global and the local policy and regulations, how this kind of regulation can support biodiversity-related financing. So that is the first question to set the scene.
Okay, thank you. So first, I would like to give my special thanks to HKGFA for inviting me on this discussion, and obviously Crystal for moderating this. It's great to meet every one of you from the audience. So just on my role. So my role at Barclays actually involves doing independent research on ESG topics and help our internal analysts and our clients integrate the fast developing ESG variables into the financial analysis and investments. And like Crystal mentioned, my coverage is on Asia, which I guess is a very, very important topic today, given that our earlier research shows 60% of the GDP here in Asia depends on the stability of nature and the ecosystem. So for my job, the availability of frameworks and data, as well as the government policies and regulations, as well as corporate actions, are very important for me to do research and even generate high conviction ideas. So I think for me, nature and biodiversity, I think it has been a long-standing theme for a long time. But just like Robert mentioned initially, I totally agree with him. We have seen a lot of frameworks, regulation that were not out there before, but now it's totally out there. Especially, I've seen a lot of changes the past 12 months alone. So if we think it from 3 different landscapes, first from the global landscapes. So to me, personally, the key evolution was obviously the final version of the TNFD framework, which was probably already covered in the previous sessions. And besides that, I also pay attention to the rollout of the SBTN guidelines, which is the science-based target network, which helps companies set targets on nature-related issues after assessing and disclosing the risks and opportunities. And also, I think NGFS, which is a global network of central banks, they also published a very important nature-related framework last September, which will actually help to guide policies for central banks and financial companies down the road. And on the sectors, what I want to say is that nature-related risk is becoming real. If we think of Asia's biggest trading partner, the EU, their new EU deforestation regulation will come into effect end of this year. So that will actually have a profound impact on requiring the companies who sell those 7 soft commodities in EU to make a disclosure on their deforestation. So all these it's no longer just about disclosure, it's actually getting real and physical. So as Crystal asked, I think for Asia, you're definitely right. There's so many new policies and regulations in the past few years. If we just use 2023 as example to show the recent progress, I think Japan, first of all, they published a national biodiversity strategy and action plan, basically supporting the 30% goal of protecting land and ocean by 2030. India, they also revised their Biological Diversity Act to basically support the biodiversity-dependent sectors. Indonesia, I think they had a new biodiversity beyond national boundary treaty, basically just to show efforts to protect the ocean. And also, I think lastly, besides all these policies, we also see a lot of initiatives from the sectors alone, especially from the private sector. For example, for TNFD, although it's quite new, we already have like over 300 global companies pledging to be an early adopter of TNFD. And interestingly, out of the 300 plus companies, more than 40% come from Asia. So that's actually a very, very meaningful percentage. But the issue is that if we deep dive into the country specifics, actually the locations are mostly coming from Japan, Korea, and even Taiwan. So definitely there is more room for companies from other actors to act. For example, like China, India, Indonesia, Vietnam. These are all countries that have a big dependence on nature.
Thanks, Dad. I think especially Asia, because I think in this region, the market is relatively more influenced by the policy. So since the policy and also the legislation is in a positive trend, we are very confident in the near future or long-term future, Asia will be doing a great job on biodiversity protection or the related activities. Then my second question will go to Gratien. Just now, Deb has already introduced so many commitment or regional or global framework with different targets. Can we get to a question to you is how big will you think all those kind of framework or legislation or whatever can lead? In terms of the market size, is there any predictions from whatever institution or from the international board? And we also want to know what is the current financing status, and also there will always be a gap. And I do want you to share how big is the gap and what is the challenges within the gap, and also some possible ways to solve it.
Thank you very much, Crystal, for that tough question. I will try to answer that. Thank you very much to HKGFA for having me. To answer that very tough question, well, it depends. It depends on how you define biodiversity finance and how the market globally undertakes new financings toward biodiversity loss reduction and reversal of biodiversity loss. The Convention on Biological Diversity established that around $700 billion per year were missing to reach the COP15 goals of halting and reversing biodiversity loss. So that's a huge amount of money. But what is behind biodiversity finance in that definition? Well, it's both conservation and restoration, but that's only one part of the problem. The other part of the problem is financing biodiversity loss reduction. So as we do with climate, when we finance CO2 emission reduction, we must finance biodiversity loss reduction. So it would be changes in practices, changes in the business models as well, like reducing water consumption in production processes, etc., etc. And just so you know, like financial institutions have a tremendous role to play here, because in credit processes, in discussion, strategic dialogue with clients, we have the power to disseminate biodiversity reduction in the production processes through the financial instruments. So how to close the gap? Well, the gap can be closed both by public institutions, financing, conservation, restoration, building public policies, supporting new financial instruments, incentivizing companies to reduce their pressures, etc., etc. But the financial institutions themselves can develop new financial products or use existing ones to better integrate biodiversity into financings. So there is no silver bullet to reach that objectives. The question is as complex as mitigating climate change, but maybe a first step, as the COP15 established, would be to halt biodiversity loss by 2030. So that would be done through two levels mainly: reduce financing that are harmful to biodiversity, or reduce progressively. So that would be deforestation related, for example. We've heard Dave talk about the EU zero deforestation law and related commodities. Reduce financings toward pesticides production, use progressively, and other harmful activities. So that's one level. A second level would be to finance biodiversity pressure reduction. So that would be financing sectoral practices changes, like in agriculture, for example. We know that our agricultural model globally is harming biodiversity, and that's a major cause of biodiversity loss in the last 50 years. So there's change here to finance. Then there are some business model to change. We can think about the mining and metals industry that must build recycling capacities in order to reduce resource exploitation and land use degradation. So there are many things to finance there as well. Technological implementation to reduce pollution, like in the gas distribution industry, for example, or the power industry, and after that, there's another way to reduce our pressure on biodiversity is to better locate and understand our geographical exposures to sensitive ecosystems. As a bank, I need to understand where my financing may have an impact, geographically speaking, to reduce my exposure to biodiversity sensitive ecosystems. And then comes the second step, the large one we know of already, is to reverse biodiversity loss by so to finance market through the market conservation and restoration projects that are usually financed by public institutions now, but can be through public private partnerships funded by private actors as well. So many challenges and opportunities.
Yeah, of course it is. But is there any like existing, because we all know like to tackle all these new issues like climate change or even biodiversity, is there any existing kind of blended finance projects on this topic already? Like yes. How it is going?
Yeah, large-scale project exists. The best example we know would be debt for nature swaps, but that can be adapted. So debt for nature swaps are generally debt that is forgiven by investors, financial institutions in distressed countries in exchange of conservation policies. So it's mainly sovereigns that use such product, but that can be adapted in order to finance conservation, and that's a public-private partnership, because the sovereign that is issued that is issuing a bond related to a debt for nature swap will have a guarantee generally by a public development bank, and then private investors invest in the bond that has a financial advantage for the sovereign. So that's a product that has been quite popular recently. That's a huge example of public-private partnership blended finance. Yet it is hardly scalable. So there are innovation here to improve the scalability of such a product. So there is plenty of opportunity in there as well.
Mm-hmm. Okay, thanks, Gratien. Then my next question is going for Sylvain, which is very related to biodiversity label fund, which is, I can see it is more visible. I know MSCI has just done a research kind of on biodiversity label fund. I think it is very interesting, at least for me. And could you share like more information of the funding? Mm.
Sure, thank you. And thanks to HKGFA for inviting me on this event. It's a great panel, good questions. So thanks for highlighting the research we do, because a lot of people know the work we do through ratings, through indexes, raw data and everything, but we also do research. I'm part of the research team, so really I got to highlight this work as well. And actually, Robert-Alexandre, you mentioned that a lot of clients are lost in translation, I quote you, when it comes to biodiversity labeled funds. So we looked into this at the end of last year. The research team did an interesting research. So a lot of our clients, of course, are very familiar with ESG and climate funds, but we saw a lot of new fund launches since, I'd say, 2022 mostly, and a lot of activity following COP15 and the Global Biodiversity Framework, and of course, a lot of interest following the launch of the TNFD guidelines last year during New York Climate Week. So we looked at I think about 160 funds that are thematically linked to biodiversity through fund name or investment strategy. That's about $60 billion in AUMs, which is incidentally about 2% of the full 3 trillion sustainable funds market. So out of the 60 billion, well, 59 billion, so most of those funds are biodiversity-related funds, but sort of tangentially. So, circular economy, waste, water, things like that. And only $1 billion out of 60 are, strictly speaking, biodiversity labeled funds. And mostly mutual funds launched in 2022, 2023. We looked at their exposures. So, what's in those funds? So the largest exposures are industrials and then IT and materials. Most likely through the search for nature-related opportunities, but also avoiding extra harm. There's no exposure to energy, or hardly any exposure to energy, interestingly. I think that's a bit of a problem, but that is also an interesting outcome. And also, I think something along the lines of 90% of the funds are really equity strategies focusing on developed markets. And we know that a lot of the concerns that we should have is actually in emerging countries. So that is also something that should change. We also looked at to what extent those funds are exposed to so-called sustainable impact solutions, which is a specific terminology that MSCI clients use. And we found that they exposed twice as much to our clients to revenues from sustainable impact solutions. So things like, issuers basically producing solutions for society and environment related to natural capital and climate change and so on. So really there's a wide variety of terminologies, but a lack of harmonization. We see exclusions, we see the use of more sophisticated metrics like the ones that you showed, Robert-Alexandre. We see things around the impact of nature loss on investments, and conversely, the impact of investments on nature, which is really quite different, really. So traditionally, MSCI has brought clarity, I would say, to a lot of those debates, because we have a large client base and the solutions we put out sometimes become mainstream. But I think this is also an area where regulators should look into to produce a bit more clarity and guidance.
Okay, thanks. But I do want to like a quick follow-up. You mentioned like only 1% is really on the biodiversity label fund.
Yeah, 15 funds.
Label. I mean, because you also mentioned like the regulators, they need to clarify the label. So which definition of the labels you are using right now?
So those 15 funds, the 1 billion dollars AUMs is really funds that contain the word biodiversity
Yeah,
in their
I know.
naming.
Yeah.
Or ecosystems, I think, as well. So really more recent, more sophisticated. But this is a very recent thing. Whereas circular economy, for example, we have indexes on circular economy that have been in on the market for quite a few years now. This is related to biodiversity, right? But biodiversity cannot boil down simply to, for example, circular economy and waste management, clearly.
Okay, got it. And then next question, maybe back to Gratien. Just now we discussed the funds. Now I do like to know, like from the business of the bank, can you share with us some cases? Either it can be bond or can be loan or the other innovations. So if we are looking at the product design, I mean, I will assume they are very similar to green bonds. So what is the difference for this kind of products compared with climate change or green? Because that would be easier for us to digest. And looking forward, do you think that will have the similar level of success as the green bond or green loan? Yeah, question.
Yes, thank you very much. So first, from a bank perspective, there are many places where to introduce biodiversity in products, but also in the credit process itself. Like when having a credit committee, having a paper regarding the biodiversity impact of the project is something that is going to be systematic in the years to come, at least from my perspective. And then there is the solution angle, the product angle, and indeed in the product angle, sustainable finance didn't start with biodiversity in mind. It started with climate, yet it is building on what it has done with climate to better integrate biodiversity. But it cannot go faster than companies themselves, which need to better understand and integrate biodiversity in their ESG strategies. So yes, indeed, green bonds are, like Sylvain said, related to biodiversity in many ways, because circular economy is related to biodiversity and resource exploitation reduction. Pollution reduction as well. So all of these are categories of use of proceeds in green bond frameworks. The category itself that's called biodiversity conservation and restoration is also a green bond category, yet it hasn't been really used by corporates to invest in restoration and conservation projects. In 2019, it's less than 1% of the proceeds raised through green bonds that were allocated to restoration and conservation. And usually it's only sovereigns. We can think about France, for example, who allocate such money to conservation and restoration. So yes, green bonds de facto contributes to reduce companies' pressures on biodiversity, but not necessarily to conservation and restoration measures. On the other hand, there is another type of products that are sustainability-linked products, which are bonds or loans that are indexed on key performance indicators related to the environment or social KPIs. And in this particular product, we've seen a lot of biodiversity pressure related indicators. So it may be also circularity, waste management. It may be pollution, prevention and control related KPIs. And more recently by sovereigns, KPIs related to deforestation or else. And it's around 20% globally. 20% of the sustainability-linked loans or bonds that integrate such KPIs. And in Asia, it's even more. It's around 40% of the loans and bonds that integrate such KPIs related to pressure reduction. So we know that sustainable finance is already addressing the problem, yet it can do better. It can increase that percentage of KPIs used related to biodiversity. And it will, once companies will have ESG strategies in place with relevant KPIs related to biodiversity and further integrate biodiversity related KPIs into financings.
Okay. Thank you. It seems like current green bond market or sustainability linked loan or bond market actually already covered some of the biodiversity KPI. Yeah, I think that is also a good question for Dive. Like if we are going to talk about the taxonomy, is there a clear taxonomy trying to define what is the actual type of activities to tackle biodiversity? Because right now it's the kind of overlapped with sustainability or climate change. And also I do want you to highlight because these kind of things for the investors, sometimes we took this as a more of a risk than the actual opportunity. So when you are discussing or talking about the taxonomy, can you also give us some example? What is the exact opportunity for the existing business and also the new business? So that is something I think is very interesting for the audience to know.
Yeah, sure. I think, yeah, I would love to maybe first talk about the opportunity. So I think so first, I think before talking about the specific opportunities, I think it's actually key to understand still where the risks are. What are the drivers of loss of nature and biodiversity? I think generally there are 5. I think some of the panels already discussed this, which are basically the change of land and ocean use, overuse of resources, pollution, invasive species, as well as climate change. So I think also it's also important to know these risks can be very location specific. So companies in different sectors and different countries can face very, very different nature related risks in different locations. So if I use example, for example, let's say 2 companies are making exactly the same product, which require, let's say, a lot of water, but they are actually doing that in different locations. Let's assume company A's key locations are very, very water intense, which means there could be some stress risks, as the availability of water is actually a lot less than demand. And so when the issues happens with different climate scenarios, this kind of water stress risk can maybe get much worse down the road. This will actually mean that company A, who's producing that water intensive product in that location, can face much bigger risk down the road, let's say potential revenue loss or even cost increases, let's assuming regulation changes or there could be some litigation costs. So this actually means, for companies who realize this problem today, they can actually also act to find opportunities. So probably what the company can do is to invest more heavily in water recycling or water reclaim technologies down the road, so they can mitigate this kind of business risk down the road. But on the flip side, if company A does not recognize this problem today, or it does not even disclose this kind of information with investors, this will actually mean there could be a future financially material risk for investors and stakeholders. So I think another point I want to make is that there's a lot of taxonomy out there focusing on green, less so on nature alone. But I want to mention that it's actually important to remember that, as I mentioned, that climate risk and nature loss risk are actually interrelated because they're kind of the drivers of each other. Also, I think in the beginning I mentioned the NGFS, the Global Network of Central Banks. Based on their recent framework, they actually mentioned very clearly that they consider climate risk as part of the broader nature risk. So I think there are voices out there in the industry supporting corporates and sectors taking an integrated approach going forward. So instead of separating what is climate, what is nature, what you're going to do separately, an integrated framework and strategy will actually be all-encompassing. So, for example, one company we spoke to recently, so my question to them was, are they going to, given that they're very related to nature, my question was whether they're going to publish a separate TNFD report, which is nature related, given that they already have a TCFD report, which is climate related. So their answer is that they're probably thinking of just building on the existing TCFD report with more data and guidance from the TNFD approaches. So that's actually how the corporates are reacting and thinking now. And then, so if we use the water example again, let's say a company who is investing in renewable energy, so that sounds really good because they are trying to address the climate transition risk. But at the same time, if we take an integrated approach, maybe at the same time, they should also be thinking whether this particular renewable project has any negative impact on local nature, because we all know that like utility companies or their power projects can be very water intensive, or maybe they even could occupy a very important landscape. So, and also I think another trend is a nature-based solutions, which I think is a brilliant example to show how the integrated approach can basically address both climate and nature challenges. For example, restoring forests or growing more mangroves can basically address both climate and the health of the ecosystem. So, I mean, just talking about the potentials, I've seen estimates by the UN Environment Program, like they're estimating that I think globally from now to 2030, we need about $500 billion of financing every year. And Asia is actually a very big part. I think their estimate is something around 160 billion a year. So that tells you like how much opportunity we can kind of capture just for nature-based solutions. But their report also mentioned that, I think is also mentioned by some of the panelists before, there's a lot of gaps on funding, and also the participation is predominantly from the public sector, like governments, sovereigns, and the policy banks, but less so from the private sector. So one of the challenges they talk about is the lack of commercial and scalable project pipelines. So I think with all these innovations and frameworks and corporate action happening, I think there's a lot for the financial institutions to act and to kind of come up with commercial and innovation solutions down the road. And lastly, I just want to mention that based on our recent research, we've looked at some of the nature-dependent Asian companies. So we found like just compare these different nature-related variables. We think companies in general do have pretty good disclosure and have some kind of strategies on water. But then when we move into other variables, other realms, the kind of transparency on disclosure and target is actually a lot less. Let's say for land, for circular, for ocean, biodiversity. So I think water is definitely something that sounds a bit more mature on relative basis, probably easier to come up with financing solutions, but the others have a lot to improve. But again, I think this is just the beginning of a very, very like fast-growing industry. The science-based target network I mentioned previously, they've recently published a guidance on water. So like giving guidance on how corporates can discuss and set targets on water. And they've also come up with a beta version for land. I think the next phase they're going to cover is ocean biodiversity. So which means there's a lot more that can happen in the future.
Thank you, Deb. I do want to echo, like, actually for the biodiversity or the whole topic, if we look at the breakdown, it is not new for us. We have been already like for decades to tackling all the issues such as water and also the air pollution, and of course climate change. Because we also have done, BNP Paribas also have done kind of a footprint report back to 2022. Actually, we have found nearly 1/3 of the data is actually the disclosed data from the corporates, which means those kind of work has been done by the corporate already. But in the future, we do want to like explore to the other area, as you mentioned, like land or forest or whatever. Okay, then the last question will go back to Sylvain, which is related to, I know you have been talking with global clients and also the global peers like from time to time. That is part of your main job, of course. So I do want to know like what have their like main interests and or what their kind of main demands during the conversation on this topic, and what is your suggestions for financial institutions on their journey? Maybe start with footprint calculation, or even further to asset valuation, or even some kind of data modeling. I think all those information. Would like.
Thanks for your question. So we do get a lot of questions from clients, and that's a good thing. And part of my job is also, of course, to make sense of those questions. So our clients are banks, asset owners, asset managers, insurers, wealth managers, and so on, all around the world. I looked into our client logging file, and we got something around 200 client requests specifically dedicated to biodiversity since 2022. And I'm sure a lot more have not been logged specifically into this tool. So it's really an avalanche of questions. And we get about 80% of those questions from EMEA, 15% from the US, and unfortunately only 5% from APAC, which is something that really should change, should evolve. And I'm sure your webinar and your work will be helpful in this space. Most of the questions come from UK, France, the Netherlands, very interestingly, the United States, Germany. I noticed there's 3 French speakers on your panel. So why are they asking those questions? I mean, there's been since 2020, and actually, Robert-Alexandre, you alluded to this in your slide. There's been a whole host of milestones that generated a lot of interest, including the launch of the TNFD, the Finance for Biodiversity Pledge, the EU Taxonomy in France. You mentioned Article 29, which is a big thing here in France in the French market. Deforestation regulations in the EU, the launch of SFDR, which clearly also refers to biodiversity. I mean, in 2023 alone, just last year, we had the COP15 agreement. I mentioned this. It actually has a whole target 15, dedicated to investors producing reporting against the global biodiversity framework. We've had the COP28 starting to make strong connections between the nature and climate agenda, which is really helpful. The launch of the TNFD guidelines, the EFRAG TNFD agreement, and just this year we have very recent, just last week, announcements from the ISSB. They're going to work. The ISSB is going to work on nature-related risks. GFANZ, the Glasgow Financial Alliance for Net Zero, which is quite influential in our industry, has also launched a nature working group. There's the COP16 stock taking place in Colombia later on this year, and so on. So really a lot of interest. That explains the avalanche of questions. Now, what do they want? I also looked into our statistics. 45% mentioned footprinting, and we'll come back to this. A third of them mentioned screens. So they want to screen out troublesome stuff, right? They want to screen out deforestation, screen out issuers located in sensitive areas. These are typically the 2 kinds of screens that come back quite often. A third of them mentioned the TNFD, of course, and I expect this is going to be more and more. A fourth of them, 25% approximately, mentioned biodiversity risk assessment. So that's the idea of, can I measure the risk to my portfolios? I would think this should be a much higher proportion, but this is probably reflects the state of data in this space. And really the questions they have, so like I mentioned, really it's all about impact. I mean, how can I identify sectors, companies, products, activities that contribute to nature loss? That's a big thing. That's the 45% I mentioned. Dependencies, we heard that word. Dependencies really is the kind of the physical risks word for nature in our space. Which part of my portfolio holdings is going to be vulnerable to biodiversity loss? Horseshoe crab, Robert-Alexandre. Management practices, that's very important. We have a lot of clients coming from the ESG rating space. They're used to understanding to what extent companies are mitigating their ESG risks. Well, what companies am I investing in that are actually adequately managing biodiversity risks or impacts? That's also very specific. Increasingly, I need to report against, the TNFD guidelines, upcoming EU regulations, CSRD, SFDR, etc. So there's a strong demand for regulation. And then, but to a much lesser extent, nature-related opportunities. That usually comes from index clients, of course, who want to build nature-related indexes, and so they want to be exposed to issuers that will be, the winners of the nature transition, let's say. I think they might be a bit disappointed because so far the opportunity space in the listed issuer space is not very large compared to climate related opportunities. So what do we do about it? I mean, of course, it's very clear that biodiversity loss is bad and it will impact portfolios, but how do you measure that? That is much more difficult. That requires, linking back to portfolio to issuers that is a bit more difficult. So we've had biodiversity related data in our ESG ratings activated only for some sectors. Not all sectors, of course, have this kind of thing. But last year during COP15, we launched 2 new screens. I mentioned deforestation sensitive areas. That was what we did. It was obviously very important. And those screens are a great first place to start when you're a bit lost in translation. And then a few months ago, we launched a whole new data set called the Biodiversity Metrics. So now that this is a standalone solution, I won't go through all the details, but it comprises the existing data I mentioned, but as well as a few new mappings. So we often help our clients to map against specific frameworks. So that includes the TNFD LEAP approach. Now it's mapped in this framework. The ESRS E4, that's the biodiversity ESRS, SFDR, Article 29, the French regulation. So when you use those data sets, then you get those kinds of mappings. That's great, because otherwise it's really difficult to do it alone. We will be adding, and that's sort of a pre-announcement, we will be adding within just 3 weeks a new biodiversity footprinting solution, which is similar to what you presented, Robert-Alexandre. But I think it's going to be much better. And that's going to be added to the existing data set. So that's the kind of thing that our clients will get used to. And we're also working on other solutions, hopefully by year end in the risk space. So it's tricky because we need to combine those extra data sets with geospatial data. We mentioned this a little bit. That is a new thing for many of our clients. It's new for them to try to understand where their issuers are actually present on each locations. And that obviously is absolutely important when it comes to nature loss, because biodiversity risks is inherently local.
Okay, great. I think we don't have enough time to have a lot of the Q&A. However, I do have seen, like, if we are looking at the order, the first one has been addressed by Gratien already. Then I want to pick the second one. I think maybe Robert, you can give us some answer in terms of what is the main motivation for for investors to consider investing in biodiversity-related projects, and any specific example. I think you have touched the example already, like circular economy, water, or whatever. But maybe you can touch more on the motivation side.
Well, motivation, I think, can vary. There would be first from just putting your money where it matters. I think still it's a super valid reason. Sorry to say that, but we have a lot of investors who are very, let's say, willing to do that. And the issue they've been facing so far has been the lack of solutions to do that. For example, SDG 14, the life below water, there was nothing. We launched the Blue Economy ETF, which is meeting a bit this need. And then we saw investors like being happy to invest in these products. So, this is the type of approach where I think investors, when they see credible proposals on the topic, they can be satisfied when it meets their expectation on just it's the right thing to do. Then there's also the avoiding risk part, because it's also a question of performance in the end. Going back to the horseshoe crab story, I think it's the first time I'm mentioning it, and Sylvain also one, but just think, what if we don't have horseshoe crab anymore? Well, we have all the pharmaceutical company not able to do any vaccines. So from a stock price perspective, just think about if you invest in pharma, then you will just have no returns. So it's the type of thinking that it makes sense from a risk perspective to invest in good technologies or service providers who are addressing biodiversity loss. So yeah, long story short, the reason can be different. It can be diversification of your portfolio if you invest in forestry, for example. I think whatever reason is good as long as they invest in biodiversity.
Thanks for the summary. Yeah, I'm sure, like, investors, they do have their own reason. Either they are looking for the long-term opportunity, or they want to mitigate the risk, or they do have a higher moral standard to do something, which is, I think, exactly the same as climate change, which is the same topic. Okay, I think I'm going to end the panel right here. I'm going to pass the floor to Jenny to wrap up.
Great. Thank you so much, Crystal, for the excellent moderation, Robert, Sylvain, David, and Gratien for the really insightful deep dive. And I can see we have enough materials for perhaps a 6th module. But in quick summary, because there was so much ground that was covered, I just wanted to highlight a few points that I will take away, which is financial institutions need to push for more integration of nature and biodiversity strategies into their business operations. There are existing standards and frameworks such as TNFD and SBTN that they can start on. There's no silver bullets. There are different strategies that we can use to halt biodiversity loss by 2030. And there are already existing biodiversity-related products that exist under green bonds and sustainability-linked loans. And I think hopefully we'll see more but nature-based solutions, debt for nature swaps, and also private sector financing, as these models become more familiar, I guess, and more integrated into the ecosystem. And that climate and nature-related losses are interrelated. The risks are very real. The markets are developing rapidly. And so we must also think of the impacts that we have on species, such as the horseshoe crab. So finally, before we wrap up, please join us for Module 5, where we will have real case studies